Hello friends, I welcome you to the Konexio SME IPO review. Today we are discussing a company which is in the niche production of a soya-based oil extraction. Incorporated in 1987, KNI Agri is agro-based company and its primary business is the solvent extraction, oil refining and trading in agro commodity. The company has got wide range of production based on soya. The company has got 6 manufacturing plants located in the region of Madhya Pradesh. The Madhya Pradesh is mainly known as a good soya-based seeds, and therefore the proximity to the raw material sources help company to procure the raw material at much lower cost and a constant supply of a soya seeds. The company has a solvent extraction capacity of 375,000 ton per annum, oil refining capacity of 60,000 ton per annum, and a 24,000 ton per annum capacity of a flour mills. The its plants are located in the Madhya Pradesh, and therefore all the soya-based production is very conveniently produced over there. Now, the company is venturing into a mustard oil processing company to reduce its dependence on the soya base, as currently soya-based product contributes around 70% of its total income. Talking about the financials, company in FY21 has reported a net revenues of 1300 crores, while its net profit was at around 26 crore. Company's ROE is at 16.2%, while ROC is around 20%. For the first half of the FY22, the company has reported net revenues of 595 crores, while its profit was around 17 crore. The company falls in the FMCG sectors, and therefore there is a continuous demand for the soya-based product. Currently, the company is operating 44% of its total capacity of the production. However, its total production and the top line mainly depends on the soya-based supply. Any eruption in the supply can disturb company's capacity utilization. If we see the valuation, the company shares are offered at a 5p and around less than 1 price to book value. The price looks very attractive considering the P multiple and the price to book value. However, I would like to talk about some of the risks associated with the company's business. The first and foremost risk is that 70% of the company's production is based on the soya-based production. So any disruption in the supply or the damage due to the rainfall can affect company's production. Secondly, the company's business is a very low margin business. Around 90% of the total revenue is its raw material cost. Around 5 to 6% is its other expenses cost. It means there is hardly left for its operating margin. By FY21, the company has reported the EBITDA margin of the 4%. Thirdly, the company is a nil debt company, which is very positive, but its working capital requirement is very high due to the sourcing of the soya-based product, soya seeds. Any increase in the working capital can impact its debt requirement. 60% of country's requirements are made by the import. If the import comes at a very low cost, then there is a risk for sales of the companies. The company, considering all this, has got a limited growth opportunities. The export market is also very limited, as the soya oil is not allowed to export and only soya meal is allowed to export. So considering all this risk factor, we need to understand how the company can be grow in the business in the coming years. Now, let me share you the IPO details. The company's IPO is starting on 15th March and ending on the 17th March. The company is offering 65 lakhs 84,000 shares and the price range of 71 to 75. The market lot of the shares offered is 1,600 per unit, and the lead managers are Hem Securities. I thank you all for listening to me. Thank you so much.